So what do you think is going to happen to the housing market when interest rates finally start to decline? I mean, we're all talking about it. First-time homebuyers are sitting on the sidelines waiting for it. The rest of us are on the edge of our seat talking about what Fed Chair Powell and the Federal Reserve Board, when they are going to start dropping the Fed rate. What is inflation doing? What's the economy doing? And dang, those job numbers that continue to keep our interest rates high. And we all want it so bad. But what does it exactly mean? I mean, have you thought that through? It's kind of like the elephant in the room. Well, I want to talk about a couple of reports that just came out and the time frame that happened during those reports and what we're actually seeing now and the cracks that I'm starting to see in the economy. But before I do, if you like this video or you dig all things real estate and you want to stay geeked out on the economics and lending and the real estate market, make sure to subscribe to our video because I want to make sure that we're able to continue to help more home buyers and seekers just like you. So this week, we actually saw the existing home sales and the new home sales reports just come out. And I've got to admit, they were a little bit more impressive than we thought. We all kind of felt it. When 2024 kicked off, there was an exuberance in the housing market that interest rates had started to drop and people were coming out. And I've got friends. In fact, I talked to a good friend of mine who has 11 listings coming to the market in the first quarter alone. Now, that's a banger compared to her last year where she had 3 listings. So I'm not saying that she's always that busy. That's the market we all saw coming out of 2024. But those two reports are in the rearview mirror. Those two reports are talking about the time frame where we saw interest rates drop from 8.3% back down to 6.67. Now, remember, they had been around 6.6 for about 5-6 weeks. We saw continuing improvement in mortgage purchase applications. Then it jumped up to 8.03, and then it had come back down again. Mortgage purchase applications had jumped up 24%. So it wasn't a huge surprise that the existing home sales increased 3.1%. We had finally nudged our way back to an annualized 4 million existing homes sold. Like from the bottom, we came back up to 4 million. When you think about 4 million homes sold, that's kind of the baseline considering our population. Because honestly, outside of the last 4 months, and that period of time between 2008 and 2012, we hadn't seen 4 million since 1995. Double clicking on that, there were 263 million people in the United States in 1995. There are 340 million today, 150 million working adults. The new home sales report also ticked up. But if I think about what was revised from December, it was actually down 0.5%. And oh yeah, only 80,000 new homes are actually ready for sale. That's a 1.5 months of inventory. And do I need to remind you that there are 340 million people in the United States right now? 80,000 new homes. They're trying to keep up, but it's a business. They're not going to overload the inventory market, or they're not going to overload the real estate market with new inventory. So what's happening right now? Right now, rates have gone back up again. They went from the 6.6 to where they had dropped back up to just over 7%. Depending on your situation, you could be quoted anywhere from 6.875, 6.95 up to 7.25. Mortgage purchase applications dropped 24% in the last 30 days, 11% in the last week alone. It's not a surprise. It's affecting affordability on top of home prices that continue to go up. Higher rates are keeping buyers on the sidelines. Do you remember all those conversations about the demographics and this largest group of millennials who had finally hit first-time home buying age? That was all supposed to happen between 2020 and 2024. If you think about that target, we're still missing 4.2 to 4.7 million home buyers ready to come back into the market. 4.2 to 4.7 million home buyers ready to come back in the market. I mean, that bears repeating considering the fact that we only have 80,000 new builds ready for sale and 1,010,000 existing homes in inventory nationwide. I mean, what do we think that that's going to do to home prices or our real estate market? Well, I want to dive into the economy for just a minute because I'm starting to see a few cracks. So we all know that we had an extremely strong jobs report, an extremely low unemployment number. All of that was data for January. We also just saw the initial jobless claims came in down yet again, another 5.6% week over week. I mean, employers simply are not letting people go, or if they are, those people are quickly finding new jobs. Yet there is a WARN notice, a WARN notice that says that any large companies have to release 60 days in advance notice that they're going to be laying off. In January, that was up 25,000 people that were expected to be laid off. What is that going to start to do to our initial jobless claims and our unemployment numbers? And we're already starting to see small notices of consumer weakness. In fact, I've talked about this before. The massive uptick in use of the buy now, pay later that we saw over the holidays continues to increase. In fact, it's expected to rise over the next 3 years 1.5 times what it is today. At least 42% of all Americans have used it at least once. 38% of the people who have used buy now, pay later have already missed a payment, which we know immediately kicks in that interest, which is running at 31% right now. And here's the kicker. Now you can use buy now, pay later in grocery stores, and 56% of all buy now, pay later users are using it on groceries. So at the same time that this is happening, that more people are pushing off their expenses to later, they are saving less. We are seeing AI picking up. In fact, there was just a news headline about Terry Perry had halted an $800 million studio expansion after seeing OpenAI's Sora. He saw the writing on the wall that AI was going to replace some of the workers that he was employing in the space that he would need. This increased technology and productivity is going to reduce the need for labor. It is going to increase unemployment. And eventually we will see lower interest rates and increasing demand. Now, I don't think that our lower interest rates are based on this inevitable AI increase of productivity, but I do think that this is a continued trend that we're going to see on a limited amount of inventory. The Fed Watch tool now has a 53% probability that we're going to see our first rate cut in June. There's a 66% probability that we'll see 2 to 3 rate cuts by September. Now, we all know the Fed Watch tool is simply what investors believe the Fed is going to do, and it's not accurate by any stretch of the imagination, but to simply say that the industry and investors don't see a Fed rate cut between now and June's Fed meeting. This is not the time to rush into buying a home. It's not the time to rush into the real estate market. I mean, we're already seeing that those homes that are priced right and staged right are going for $50,000 over asking. But I will say it's a time to put together a plan. It might be your right time to buy, but if it's not, you want to be ready when it is, because we know interest rates are going to come down. It's not necessarily a matter of if, but when. When does inflation continue its downward trajectory? When does labor show some cracks? And when do the cracks in labor start to put pressure on consumer spending? Ultimately, we all know consumer spending is 2/3 of our GDP, and a lower GDP will bring a slower economy and lower interest rates. All of that will give gifts to those 4.2 to 4.7 million homebuyers sitting on the sidelines. Maybe just like you. Well, this is Nicole Rueth. My team and I are ready to support you. If not now, when the time is ready.